To conclude this first segment of today, we have a panel discussion, and I'm very happy to welcome Philipp Sandner as the moderator and chair, and all of the speakers we had before, and Lena Grale. The stage is yours, Philipp.
Perfect. Good morning, everybody, from my side also. And let's directly start with a panel discussion talking about the digital euro. So maybe to get started directly into the topic concerning CBDCs and also digital euro, digital currencies, and so on. There are so many topics out there from so many organizations. Maybe please, everybody, present yourself briefly, your company, and also your general perspective on the digital euro. I know this is a tough question, but a very, very general sentiment. What is your topic in this area? Is it CBDCs or digital euro or company issued euros and so on? That's what I would like to hear from every one of you. Manuel, would you like to start?
Let me quickly start as I started. Yeah, as I started with the first presentation as well. So back to me, my name is Manuel Klein. I'm a senior consultant at EY at the technology consulting division. We focus on capital markets and we help capital market participants to understand the great effect that DLT will have on the different businesses in this space. And my take on the digital euro is that I do think that there is or there's going to be some use cases that will build up on DLT-based payments and DLT-based money. However, what we currently also see is that the demand from the industry is apparently not so big. So there are some use cases that want to leverage upon the advantages of this shared platform and that of this immutable platform. But apparently a tokenized money might not be necessarily needed. So there might be some middle steps, for example, some trigger solutions that connect the DLT to the existing payment rails that might solve the majority of the problems here. But I do think that, for example, also in capital markets, in interbank and especially in asset transfers, there's a strong need for tokenized money. So I'm looking forward to the developments on wholesale CBDC, but also on private solutions, for example, like Finality.
Okay, excellent. Alexander, what about you? What's your opinion on your general opinion on this topic of digital programmable euros?
Yeah. Okay, so Alexander Bechtel from Deutsche Bank. I'm working in strategy and I'm responsible there for anything related to blockchain, DLT, digital assets. So when it comes to the digital euro, I always like to make the point that when we talk about the digital euro, most of the people, I believe, think of the digital euro from the ECB, so the public digital euro, but there's also a private digital euro. And let me maybe my answer build a bit on what Manuel has just said. I believe there will be a division of labor in the future, and there will be a CBDC that addresses certain use cases, and there will be private forms of the digital euro that address specific use cases. I think I tried to make it clear, and Jonas thankfully built on top of that we believe that anonymity and offline capabilities will be something that might be addressed by the official public digital euro, and these more complex use cases when it comes to programmability, micropayments, offering a means of payment for the industry 4.0, etc. This could be something that is being addressed by the more innovative and more agile private sector. So I would say division of labor, we will have both in the future addressing different use cases.
Yeah, very nice statement, very clear. Lena, what about you?
First of all, thank you very much for the invitation. Thank you for having me. My name is Lena Grale. I studied at Frankfurt School and I also did some research on the digital euro before. I now work at the Association of German Banks and I'm also co-founder of the Digital Euro Association that Jonas just presented in his presentation before. So as part of the DEA, I also believe that we need to look at both. So we have the public sector solution, the CBDC, and the private sector solution, which could be a stablecoin, tokenized commercial bank money, and also the trigger solution that Manuel just mentioned. And in the end, it's just approaches for two different target groups. So a CBDC would target the people, the citizens, be a substitute for cash, or could be a substitute for cash. And tokenized commercial bank money issued by commercial banks could be a solution for the industry, so for large-scale production sites. And that should certainly be DLT-based. So in the end, I'm very happy to see that there's much development in this area. And I do think that all the developments really need to speed up, because there will be many, many more use cases in the future.
Yeah, excellent. Thanks very much. And Jonas, we already heard your presentation, but I asked this question once again because this will be recorded and will go to YouTube, and therefore it will be not connected to the previous presentation. Therefore, please, your opinion, please.
Of course, yeah, thanks for having me. So my name is Jonas Cruz. I'm currently the chairman of the Digital Euro Association, also working for the Frankfurt School Blockchain Center and writing my dissertation about the CBDCs. When it comes to the question, I think we are actually pretty in line in this panel. And when it comes to this digital euro debate, I agree with Alexander about this division of labor, that a CBDC should in the end enable offline payments and also private payments from my perspective, as I outlined in my presentation. And one additional aspect is the topic of monetary sovereignty. So that basically there is a payment infrastructure solely managed and governed by the ECB in the euro area, right? So where no other countries can interfere. I think this is important as well. Maybe not for the end user, but for the central bank. And I also agree that blockchain will increase in importance a lot. Also blockchain-based payments are important. Manuel has outlined it when it comes to delivery versus payment. And this is something from my perspective the ECB could do, but I would assume that the private sector would more focus on this when it comes to stablecoins, tokenized and tokenized commercial bank money here.
Yeah, excellent. So, Manuel, I would like to pick on your saying what you have just emphasized. You said that to your opinion, the demand for a digital programmable euro is lacking for whatever reason, and this might be surprising because the benefits are pretty clear. I just did some computations here. We have 29 trillions of US dollar being transacted on the Tether network USDT per year. So that's 80 billion per day, 29 trillion per year. To me, nobody can tell me there is no demand. You know, with such figures, that's 29 trillion, once again, nobody can tell me there is no demand. But Manuel, I don't want to offend you in any way because you are right. There is no demand from the industry. But let's discuss at this point. You have 29 trillion per year on crypto networks, USDT plus USDC and so on, and close to zero demand from the industry. How can we explain this? What's happening here? Manuel, it's a difficult question, I know, but maybe you'll give it a try.
Yeah, I can try to give it a try. So I think these are very, very different ecosystems. So when you look at, for example, decentralized finance, where all these stable coins are used, there's a lot of innovation going on there. There's a lot of potential use cases that are explored. There's honestly also a lot of speculative energy there. So people really want to explore this space and therefore need some stable money there, some stable token. But I wouldn't connect that too much with the real economy where actually money is used currently and today, and where we hopefully also see some use cases evolving in the near future where actually tokenized money brings about a lot of advantages. But I'm more than happy to get in touch with more companies and industry participants here to actually also showcase the advantages and see how their business can be transformed with tokenized money.
Good points. Jonas, Alexander, anybody wants to add something on this question?
Maybe one tiny aspect is, I think I mean, where blockchain or this digital programmable euro is really powerful is when it comes to IoT, right? So when it basically comes to all these different connected machine sensors into the internet. And I think this is something which has tremendous potential. I mean, there are figures, Philip, you also know them, that basically billions of machines might be connected to the internet in just a few years. And I think if this is the case, then there is no doubt that you need some kind of blockchain-based payment to really efficiently having these different types of asset machines to communicate. But I think that this whole machine economy first has to flourish more. It's just a starting point. And then also the DLT-based means of payments, I think, will skyrocket, at least what I would expect.
Yeah, a good point. Also a good point. Yes, Manuel, please.
Maybe adding to this real quick, because I also do think that IoT and machine-to-machine payments will become maybe a great use case. But I think there are some other parts that still are lacking. For example, identities for these machines. So digital identities that they are actually able to process a transaction. Currently, this is not possible yet due to regulatory constraints. But if we solve this, then maybe also the use cases will come.
Good point. So if we talk about tokenized money once again, we now saw what the ECB has been proposed concerning their digital euro. So it's some information has been revealed, even it's not yet a clear concept, but it will be not tokenized, and it will not even be a blockchain system, most probably, right? Then we do not have any euro stable coins comparable to USDT and USDC, and we also don't have any large-scale projects who are planning to do so. So do you think we will have a tokenized euro at some point of time? Maybe, Alexander, what's your opinion on this?
Yeah, I'm pretty confident that we are going to have a tokenized euro, and I'm hoping, of course, that it will be the banking sector who provides this. Or I would even be happy with other private institutions similar to the US offering such a stable coin, for instance. Maybe also coming back to the question you just asked, Philip, about where is this adoption currently happening, and I very much agree with Manuel that we have, and maybe to bring in the bank perspective here, we have a huge demand when it comes to crypto. When it comes to Bitcoin, Ether, and that's of course also where Tether now plays a big role. So the crypto market is exploding. There is a huge demand. We have very little demand when it comes to programmable payments in an industry environment. And I think one main problem is that we are not talking about, when we talk about digital programmable payments in the industry environment and the digital euro from the private sector, we are not talking about putting a little bit on top of the existing ecosystem. We are talking about a completely new market infrastructure. And this is nothing that and this includes digital IDs, what Manuel has just mentioned. And this is nothing that is being created within 1 or 2 years. I think this is a journey that is going to take 5, 10, even longer, 5, 10 years, or even longer. And I mean, I can also just invite industry participants to whoever is willing to play around with this new technology and do pilots, just get in touch with us, because we, of course, also want to learn and start moving into this industry. And what we are also developing, in particular, digital euro and payment solutions now together with other banks in order to provide these solutions then to our customers.
Yeah, so if it takes a little bit more time for creating a tokenized euro, what can we do up until then? What will happen then? Lena, do you have an opinion about this with the overview you have? So we cannot wait too long. So what can companies do in the meantime?
So I think what might be quite successful in the meantime as a bridging solution towards the tokenized commercial bank money would be a trigger solution. So a trigger solution is a program that connects the DLT-based transaction on the industry side to conventional payment methods. And there are already a few initiatives on this. So for example, there's eBayPay in Spain. That is a programmable instant payment, and it works on a blockchain. And that could be a good start and would then lead on towards tokenized commercial bank money. And German banks are also researching this matter and drafting first concepts on that, actually. So I believe that this might be a next step, and this could be available in maybe 1 to 2 years already. I mean, there are already examples of trigger solutions, and this could be really scalable.
Okay, and one question, maybe an open question. Anybody might respond if you feel that you're the right one to answer it. The way I understand it is that once you would try to have a tokenized euro, then this would have to be e-money according to the MiCA regulation, right? It's a must because MiCA enforces this. But e-money is not interest-bearing, as we know. But at the same time, those people issuing such an e-money token, like the tokenized euro, they have to pay interest rates maybe to the central bank, negative interest rates. So as of day one, you're operating a tokenized euro, you are month on month not profitable, but operating at a loss just because you're offering the euro on a tokenized level. Is this assumption correct, or did I forget something here? Because this is something I'm really puzzled with. How can you have an euro token according to the MiCA with the e-money framework, and then basically have no cash to pay the negative interest rates because you're operating at a loss as of day one? Did you think about this, or is the regulatory bodies or, I don't know, associations, companies thinking about how to resolve this? Any ideas?
Yeah, so Philip, I agree that this is really tough, the e-money regulation and MiCA. So when I first read the MiCA, I couldn't believe it at first, because this kind of meant that something like Libra, as it was called back then, something like Tether, something like USDC would not be possible in Europe. But that's the way we decided to go. I think the problem is not really that we are not allowed to earn interest with the e-money from our customers. I think that's not the problem. The problem is that you have to invest the e-money. It has to be backed by very safe assets, and these safe assets have negative interest rates, as you say today. So it's not possible, like Tether, to invest the funds you earn when you offer e-money into commercial papers, as Tether does it. You would have to invest it into a German Bund, right? And this, of course, has a negative interest rate. So it would be a real cost for those who want to offer e-money in Europe. And that's, to be honest, that's a problem, because, of course, we want to have a euro stable coin. That's important for the ecosystem. And for me, that's still kind of an open question. Who will be the first one, and who will kind of find a way around this and still remain profitable?
Yeah, it's a good answer, and I think it's something we need to really observe in the upcoming years, because maybe there is nobody coming out and starting such a project. Why should they? Because as of day one, you directly have a loss, and therefore sometimes I think, are we really on the right track here, or are we running in a problem here, and we don't really see this yet? But if you put like a business case together, it might end up that it might make no sense, right? Manuel, did you want to add something here?
No, I basically only wanted to reckon what Alex said. But maybe one more point that comes from my presentation, basically. So I think when you think of a digital euro that is e-money, you can do that, obviously, maybe with the negative consequences that you have also mentioned, Philip. But I think when you really want to scale up a digital euro, maybe even backing it by high liquid quality assets like government bonds is not the right way to go, because then you would actually end up with these collateral silos that cannot be used for other reasons that are currently in place, so to say. And therefore, I think a very scalable solution would be to find a way how to use the existing money that we use on a DLT, and that is commercial bank money, because this is backed by rather illiquid assets, so mostly credit, so loan receivables, basically. And this is where the magic of the current monetary system is actually happening. You create money out of credit, so to say. And if we want to break this by creating additional money by backing it with government bonds, for example, that's a completely different monetary system, right?
Maybe we should, just joking here, maybe we should back up the euro token with Bitcoin.
And it probably won't be so stable, Philip.
Not sure, but it might be profitable for the issuer. But who knows? We know the volatility. Okay, perfect. We have maybe one more question to go here. So, do you think that that in general this topic develops nicely over here in Europe? We have initiatives in Spain and in Italy and Germany and elsewhere. Also central banks, in France and in Germany and so on. People are pushing this. Do you think this develops nicely? Should it speed up? Should it maybe be happening with a little bit more coordination, yeah, less experiments, on the entire breadth of Europe, but like collecting all forces and pushing in one joint direction. Would this make sense? What's your statement on this last question? Maybe Jonas.
Yeah, maybe to go first. So I think, again, to have this different division of labor. So if I think for a CBDC, I kind of see that why the ECB is so cautious. So I'm basically more optimistic and I kind of more see why the ECB is so cautious. But as we focus on the DLT, the debate, let me also comment on this. I think it's good to see that more and more initiatives focus on this. Also, more companies implement this. We have first trigger solutions, Bundesbank, Deutsche Börse, etc. work on it. I think this is, of course, generally good, right? Of course, pace could be faster everywhere. This is also true. And I also fear what you said, Philip, before, that kind of Europe could lag behind in a few years because the stable coins might be more driven from the US. And also, I like that commercial banks think about this. But again, also, there is lots of debates about standardization, right? So I think, Philip, to your question, yes, there should be a coordination. But I'm not sure how this can look like in the end, to coordinate, to find one standard which is interoperable, etc.
Yeah, I agree. Europe is not very good at coordinating. Therefore, I'm also very pessimistic here. But luckily, we have really some excellent initiatives coming from commercial banks, which are deemed to be not so innovative, right? And this is in this domain, it's not true, I would say so, because there is really happening a lot with. You know this better than me. There is so much happening in Italy, in Spain, in a couple of other European countries. So there is some really good progress here and there with large-scale projects, which are growing, of course, and therefore it will be a very fascinating space in the upcoming months and years. Okay, thanks very much to everybody. It was a very interesting discussion, I think so. And with this, have a nice day, everybody here in the call, and I hand back over to Marcel.
Thanks, y'all.
Thank you. Bye.
Thanks to all the panelists, Lena Grale, Manuel Klein, Alexander Bechtel, Jonas Groß, and of course our chairman, Professor Dr. Philipp Sandner. We will have a short intermission of 3 to 5 minutes until we continue with regulations, politics, and the future of payment infrastructure. Stay tuned. See you soon.